Profits is not equals to cash flow, and why most investors miss this. You have probably looked at a company earnings report before, seeing the company's profit rise year after year, and you thought this business is solid. Then a few quarters later, the share price crashed. You check again and you realize that the company's cash flow has been drying up. You are not alone, and this mistake traps even experienced investors. Most investors think profit is cash, but profit is just an accounting story. They tell you what the company earns on paper, but that's not the cash that the company received. Now I want you to imagine that you are a food supplier for eggs, and you supply eggs to businesses in the food and beverage industry. When you issue the invoice, do you actually collect cash upfront, or you have to issue a credit invoice to them? Sometimes the invoice can be 7 days, sometimes it can even stretches to 30 days or longer. And as you file your invoice with your accountant, this is considered a profit. However, as you file your invoice with your accountant, it is considered a profit and a sale. So what is going on here? You see, company recognizes revenue even before the cash is collected. Profits in these accounting terms is called net income, and cash flow is called operating cash flow, and it measures how much cash a company is collected from its core operations. For example, Tesla. In the early days, a lot of cash was spent on R&D. But as Tesla sold more and more cars, their profits began to grow. Now if you look at the past few years, even though Tesla has higher profits, their cash flow has been negative, and in fact, it has widened. Over the past few years, if you look at the operating cash flow, Tesla management has announced that they will reinvest most of the cash back for autonomous driving and robotics. So a company can look profitable, but they can be cash poor. Maybe it's because the customer have not paid them on time, or the money could be reinvested into new or bigger projects. So what is the solution and how you can check this for yourself? I want you to stop scrolling this video, and why not do a simple check by doing this. First, head over to physical.ai, key in the ticker symbol TSLA. Head over to the cash flow statements. Check on the top row where you will see the company's net income. Next, check on the operating cash flow. So the next time when you look at companies, don't just read the income statement. Read the cash flow statement. Look for consistency. As profits goes higher, cash should move higher together. If not, investigate and find out why. This single habit will put you ahead of 90% of retail investors who only focus on headline.